Welcome back, everyone. Great morning so far. Let's introduce gold Terra Resource Corp. It trades on the OTCQX under the symbol YGTFF and on the TSXV under the symbol YGT. And it's a junior gold exploration company that has assembled a highly prospective district scale land position of over 800 square kilometers of continuous land immediately north, south, and east of the City of Yellowknife in the Northwest Territories. Happy to welcome its CEO, Gerald Panneton. Nice to see you.
Thank you very much, Anna. It's good to see you as well.
The floor is yours. Just call me back when you're ready for questions.
Well, thank you everyone for attending this presentation of Gold Terra Resources. We are very happy today to share our story with the attendance of this conference, and we look forward to introduce you to the story. First of all, I think what's very important about the Gold Terra story, going to forward-looking statement and the cautionary statement, which is part of our things. You can find the presentation on our website. All the information is towards the end of the presentation. We can easily Google or find out about our website, Gold Terra Resource Corporation. Our strategy is very simple. And of course, why investing in gold and why investing in Gold Terra? It's very simple. We focus on Canada. There's no geopolitical risk. And of course, we also look at a large potential. Through my career as a geologist, looking at different projects around the world, I can tell you that I've evolved in my choice of working on different projects. Now it is all about high grade. And we'll talk to you a little bit about different projects. There is a reason for high grade. You're getting better margin, you're getting lesser investment that will go along with a bigger project. And the fact also that we're in town of Yellowknife, Northwest Territory, which means that everybody goes home at night. I'm going to repeat these through the presentation, but just to start quickly, the Campbell Share has produced already 14 million ounces of gold over a 5-kilometer strike length. The district scale that Gold Terra control is roughly 70 kilometers in strike length, which means that we have tons of ground for exploration. And we're still focusing in town, and we're still having the support of the town, which means everybody goes home at night. One of the options that we did recently, about 2 years ago, was with Newmont. Newmont, the largest gold producer in the world. They bought the property in 2008 and never worked on it. This is called a con mine, which was closed, and produced gold in a range of 16 to 20 grams over a period of almost 60 years. It's not a big mine, but it's a high-grade mine. And so far, after doing the deal, we've executed and drilled more than 23,000 meters. And the program is still ongoing with some deep hole currently doing, and we're going to be able to show that. And of course, we've been growing our resource since I joined the company about 4 years ago. And let's talk a little bit about track record a bit later. But in essence, when you have investing in a junior company, we are valued at the number of ounces we find, where we find them, and of course, where does things happen. And when you look at the potential that we have in those resources, it's very important to realize where they are. And for us, being in the town of Yellowknife, our cost of drilling is cheaper, our cost of finding ounces is cheaper, which translate into much lower operating costs. So with all of this, to go back to what we are, Gold Terra, we are an experimented management team that have done many mines in the past. Myself, I was involved in founding Detour Gold in 2006, which became now the largest gold mine in Canada. We found 30 million ounces under my leadership from 2007 to 2013. We also put the mine in production, raised $2.6 billion. And this was my third gold mine I was involved with in the creation of producing gold. And what's very important about this is that once you've done one, especially the first two with Barrick were very solid, but doing Detour was also a bigger achievement. And of course, it created value for many, many shareholders. Throughout the world, throughout the US, throughout Canada, we've created 800 jobs for more than 30 years, direct job. And today, the mine is the largest. I surround myself. I don't do the things myself, but I surround myself with, of course, a lot of very good people to work with. So when you look at the next slide, you can see our land package. You can see the purple box that basically is enlarged on a red box to the right that shows the town of Yellowknife, where more than 20,000 people live. And of course, a large land package focusing on the Campbell Share with infrastructure in place, including green power, hydroelectricity that is already there. And of course, everyone goes on at night. And that allows us, when we drill, to drill for less than $200 Canadian per meter, all in, including the assays, the geologist, the technician, and the drill contractor. So we're very, very lucky to be able to be in this situation. And you can see the town of Yellowknife in the background of what used to be the Con Mine. The Con Mine operated for roughly 1938 to 2003. Was shut down when gold was hovering between $300 and $375 an ounce. So long time ago, just 20 years ago, gold was just $350. Always remember that. And today gold is almost $2,000. Gold fluctuate up and down. And sometimes mines get closed. And then it creates an opportunity. It did, for example, for Detour. When I bought Detour, it was an old mine. So I kind of like repeat the same story I did at Detour. But from a low-grade perspective, now I'm focusing on high-grade discovery, which I think has a lot to offer. The reason I joined the company 4 years ago, after my due diligence, was because it was very important for me to value the project and focus on high grade. And also realizing, this is the first thing you do when you make an investment. If I join a company, it's because I can create value for my shareholders. And that's exactly what we've been able to do. We have some very good shareholders. I forgot to mention some of them. Ingalls Snyder in the U.S. is one of our large shareholders. So is Mackenzie Fund in Toronto, which is a rich fund from the Paul Desmarais family. And of course, they believe, they've known, and they've seen me in action through different companies, especially the last one, Detour, or Newcastle Gold in California, that went very well, and these mines went into production. At the end of the day, we have the workforce, we have the hydropower, we have the roads, the access is easy, everybody goes now. And then you look at what we did to do the deal with Newmont. It's a small property. It's only about, 15 square kilometers? But it controls a very large potential of what we believe to be the extension of the Con Mine down to the south and at depth, which we'll be talking. It also has 650,000 ounces left in the mine at the grade of 12 grams. Think about it, 12 grams is worth $2,000 a ton. So it's a great, great value when you look, $1,000 a ton, which is a great value. In general, underground mining is about $200 per ton US when it's well managed and well scaled. We did an agreement with Newmont and not wanted to spend too much time on the agreement, but we've already, by the end of 2023, spent $10 million on the property. And our goal is to find minimum of 1.5 million ounces. And to go further into the Con Mine property, we'd like to show you basically what the expression of those mineralized zone, gold zone, are at surface. The Campbell Share to the right and the Con Share to the left. The Con Share was first put in production in the 30s and ceased production, I think, in the 50s, roughly. And you can see them on the section, which we call a cross section, which basically allows you to slice those surface expression and show the attitude and dip of the zone to the west. Now, on the next slide, I'd like to show you a long section. A long section basically goes looking west from the north to the south, what those intercept of drilling and mining has looked like. And you can see that, for example, 5 million ounces of gold was mined at 16 grams from historical production through the Campbell Share. And you can see that on the next slide, we've been outlining 540,000 ounces near surface. Very important. These ounces near surface will allow us to go in production earlier on than counting on where the best potential of the mine is, which is at depth. Using the Con Mine shaft, and of course, the 2,300 feet level, plus a ramp likely, we'll be able to mine for 5-6 years. So if you ask me, what are you going to do first? I can just tell you today, the plan will be to mine this 500,000 ounces first over the first 5-6 years. while we keep dewatering a shaft. And that's very important. In the next slide, we're going to look at a different composite of the Campbell shear. Campbell shear, which produced 5 million ounces, is a big deposit. It can be 20 to 30 meters in width. You find about 1 million ounces every 200 meters, over 1 kilometer of strike length. So the target area that you can see is very, very, very important, and also can yield some much better potential. And we will show you what we've recently hit, which is roughly below the mine, about 200 meters below the Campbell Shear latest underground working, where they used to mine up to 80 grams over 7 meters. Quite rich. When we talk about 80 grams, we're looking at roughly almost 3 ounces of gold over 7 meters. And even they had a jewelry pocket, and you can see this, where some mineralization was up to 500 grams over 20 meters, which means you had almost 18 ounces of gold over 20 meters. Think about it. This is very rich ore grade mineralization that just needed to be tested. And that's exactly what our company has been able to do, roughly, was to target from surface the depth extension. And what's very important on this current slide is the Robertson shaft, which was sunk in the 76 to 78 period by Cominco when they used to be the owner, to a depth of 1,900 meters, a concrete steel shaft, which today will cost over $120 million to sink. So we inherit, by purchase the Con Mine property, an access. So instead of saying that we are like 2,000 meters below surface, no, we're not. We're only 200 meters from the shaft. And the potential, as we just released in our press release of October, about a week ago, illustrate the size of the Campbell Shear, 60 meters intersection, of which the last 30 meters in the footwall is extremely mineralized. And you can refer to our press release where this section comes from to look at the detail of this intersection. And it shows exactly the typical mineralization that was seen in underground working and underground drilling prior to the mining of those zones, which carries so much gold. Our target basically is 1 million ounces every 200 meters below the mine. So to explore the next 400 or 500 meters below the shaft will allow us basically to outline possibly 2 million ounces more on our book. And this is not, we're looking for a target. No, this target is real. Look at the press release we released about 2 weeks ago. Wait for the results, which are coming within the next 2 weeks, and you will see that is quite important to look at the potential. The potential is there. We just demonstrated it. Hitting 30 meters of very well mineralized Campbell Shear in the footwall of the zone. And we look forward to share with you the next level once we have the result. And watch it, because it's worth watching it. And just to make sure that you understand the package that we have, it's not because we can drop the Con Mine if we don't like it. It's no big deal. We still control more than 800 square kilometers of ground, covering the Campbell Shear, completely underexplored, because for the last 20 years, no one has been looking in the Yellowknife district as we would look at it. The only reason that is difficult these days is our money supply. With a very difficult market, we cannot raise the money that will back up this project very well. But it is a jewel in Canada to be exploring for high-grade mineralization in town. And just to show you, we also have 1.2 million ounces north of town in 4 different deposits. Not all of them will go necessarily in production, but I can tell you, for example, that Crestaram will, Mispecol will, because they have great potential. Mispecol, we drilled only in 2022. We have not gone back yet. But the main reason I want to attract your attention to this is that we do have 32 grams over 3 meters near surface that could be easily trucked to a mill that could be built again in the Yellowknife area which will supplement our production with another source of gold. So we do have access to multiple potential discovery, not necessarily 2-3 million ounces every time. But for example, if I was showing you the next slide, I'd like to attract your attention that the 32 grams over 3 meters was intersected 200 meters south of a 19 grams over 4 meters. That could be accessed via a ramp and trucked to a mill, which is within 10 kilometers. So the story of Gold Terra and the story of the Yellowknife camp just need to be rewritten. And hopefully we'll be able to raise enough money to bring the project in a much better situation than we are today. Markets are tough, we'll adapt, there's no question. Is gold price gonna go up? We don't predict gold price, but what we can say is that it's very important. We spend a lot of time. I go to Yellowknife 2-3 times a year from my Toronto base. We have a very small office in Vancouver, which we share with other companies to lower down the what we call administration costs. We're very low key. We put our money towards drilling. We haven't stopped drilling. Despite the market being tough for the last 2 years, we have not stopped drilling. We keep drilling because we believe that we are creating value for our shareholders. And at the same time, our license to operate in Yellowknife is very important, whatever it's environmentally, socially, and of course, the engagement plan with all the people that we work with. Every time I go, my day is spent 1 day on technical and 2 days on social commitment. So it's very important in terms of what we're doing and hiring locally as much as we can. Now, if you like gold, like I do, I've been a geologist in the gold business for 40 years. Detour Gold was, one probably of my biggest achievement that people will realize in my career. But before that, I was in school. Even if I left school in 1985, after graduating, I worked for companies all the way to the end of 2013. I never stopped working. My 12 years at Barrick, I need to thank Barrick for my 12 years there because I traveled the world with them. I evaluated so many projects around the world in every continent. And I think I was very ready after building 2 mines in Tanzania, Chulawaka and Buzwagi in the early 2000s, before starting Detour. And we did Detour from IPO to gold production in 6 years, from IPO to gold pour. And this is the first bar we did pour in February 2013. Today, Detour is the largest gold mine in Canada. And we know that we can repeat this story over the next couple of years in Yellowknife. A different size company, production somewhere between 100 to 200,000 ounces a year, multiple deposits to be found, job to be created in a town where everybody goes home at night. And the main reason we focus on high grade and we focus to be in town, costs are cheaper. Everybody goes home at night. And I think it's a very important things that people sometimes don't look enough. Where is the project? What is the infrastructures? What is the power source? And all of those things are extremely important. With all of this, I would like to thank you for attending my presentation and open the floor with Anna for questions. Thank you very much.
Great story, Gerald. Thank you so much for this and a great history and a great future, it looks like. Let's talk a little bit about gold. You mentioned it throughout your whole presentation, but why is gold so important, especially in today's world?
Well, gold has always been, first of all, important through millennium. People forget the Firenze. If you know the story about the 15th century collapse of European economy, you go to Florence and you'll know a little bit about the history. I even have cufflinks that are reminiscent of those Florentine Firenze. Gold was the backup for creating a new base for a new economy, a new currency to sustain the discrepancy between all the other way of dealing business. And we're talking about 700 years ago. Gold is the same. I'm not there to say that gold should replace everything. We do have paper electronic currency. but you're never going to go away. Gold will retain its value. I call gold mobile real estate. Invest 5% of your money in gold, because gold could be, look, when I used to work at Barrick, gold was hovering between 250 and 350. When I started Detour, it was 450, and it finished at $1,900 in 2011. We went back to 1,100, and now we're back at 2,000. How do you value gold? Try to buy some gold bars on the market. It'll be difficult.
I know. Well, so 40 years in this industry. Tell us a little bit. What has it taught you? And personally, I'd like to know, what is the future when it comes to buying gold, and some wisdom that you have for us?
Well, I think if you go to Europe, if you go to Asia, gold, especially India and China, gold has a value because people trust gold a lot more than we do. I think in North America, we've been spoiled by a very strong economy, very strong leadership worldwide. But at the end of the day, if the US dollar is strong, why don't buy some gold because it's cheaper? What if US dollar goes down? You have your gold. So for me, I went through, gold is the perfect hedge for any currency outside of the US dollar. But when you look at the US dollar itself, you have a powerful way of buying gold. And if your US dollar goes down, gold will go up. So you're not going to lose anything because you bought your gold at a certain price, and the gold will go up while the US dollar, they go hand in hand, the US dollar and gold. And why is that? Because those are the two strongest currency in the world.
Now, when it comes to valuing gold, Terra, as an investment and potential to find more gold, tell us about it. How do you value it?
Well, my biggest challenge in Gold Terra is the vehicle we have. The vehicle is, 300 million share, 280 million share. It's the difficulty of raising money at these price when your stock is trading at 5-6 cents or 4 cents on the US market. It is not easy. There's no question. However, we currently are valued at roughly $7 an ounce. So if you look at our market cap of 15 million US and almost 2 million ounces going to 5 million ounces, the moment gold will be re-rated. Currently, the major company that are major producer in the world are currently discounted 20%. And the junior are discounted 100%, 80%, 90%. I look at it, it's difficult because people are skittish. What's going to happen? Look, Gold Terra, I put my own money. I own almost 7 million share, 6.7 or something like this. And I buy in every financing. I'm there to support the company. And you're the investor, and some of them will tell you they invest because I'm running the company because I know how to find gold. So I eliminate a lot of the risk of this is a good project, it's in Canada, and it's well run by people who's done it.
Thank you for that. A question from Caden Hammond. Caden says, I see you're well funded as per your recent quarter. So how far does the 4 million get you before you have to go to the market for more money?
We have to go to the market sometime twice a year, sometime once a year. I'd love just to do it once a year. Most of the money is spent in the ground. And of course, the moment and I think the 4 million is probably dated from June 30th. So you have to look at, we've been drilling since then. So we don't have $4 million left in the bank. And eventually we'll have to raise money. We hope that the market will wake up when we announce the result of our hit, which is 30 meters of Campbell shear. What I don't know, and I'm not going to be disappointed because I already am so happy with the result, technically, visually, of what we hit. We just open up a new area that needs more drilling, that is defined. The Campbell shear is 60 meters wide. I knew I couldn't miss it. That's how big it is. 60 meters is like 200 feet. It's 2/3 of a football field. Think about it. So we just need more money to drill more. And of course, we will need to raise more money. And hopefully market will get traction from that.
Scott Stein says at 200 per meter drill cost, how far down does that take you? And is that a constant cost?
It's near surface. I'd like to correct that the drilling at surface costs $200 per meters. The current drilling we've been doing at depth is somewhere between $400 to $500 per meters Canadian. It's deeper, it's more expensive, and for those who may have the question, our cutoff grade is 3.5 gram over 3 meters at surface. Our cutoff grade at depth will be more like 5 over 3 or 6 over 3. So it'll be a bit, you need more grade to pay for the depth. But we're only 200 meters from the shaft. So this is something very important for people to understand that.
Nick Bell wants you to clarify, has Gold Terra's been producing? Is there a timeline to production?
There are no timeline for production because I would commit myself to say something that I don't know, 3 years down the road, I don't know. But we have enough ounces to produce gold. We have never produced gold as a Gold Terra company. We're the only company very active in Yellowknife area. It's subject to permitting. It's subject to finding enough ounces to build a mine or in a mill, basically. So there's no more infrastructure left. The mill was dismantled, which was built in the 30s anyway. But if everything was going with no problem of money supply, I could be in a feasibility study within the next 18 months, and we could be permitting process within the next 24 months, and the project will take 1 year to build. So you could be in production 3-4 years from now.
Perfect.
Or somebody could swap us.
Well, Bruce asks, when you talk about value by the reserves you find, are there any studies done to validate like these finds of value?
The value, for example, is called what we call mineral resource estimate, MRE, which we've done 3 since I joined. And of course, the first hole that we did below the mine is down plunge and down dip from the mine itself. So we know the mining method used back then. We know the recovery of this area, which used to be free milling below 1,000 meters. So we know enough to have confidence in those ounces.
And Sam Birch asks, are there any opportunities through your past employers like Barrick for a joint venture to expedite your timeline?
I have been looking at strategic investment in this current difficult market over the last 16 months, since June 2022. For company as Barrick, and you look at Barrick produced 4 million ounces, Newmont produced 6 million ounces. So these company needs to produce within 15 mines, say somewhere between 10 to 20 mines. And they need to focus in an area where they believe they can. So for Newmont and Barrick, we're too small. But for Alamos, from B2 Gold, from other small intermediate producer, we are maybe a jewel high-grade asset, such as Red Lake was for many other company before.
Perfect.
Grade is king.
Do you have any closing remarks for our viewers today?
I'd like to thank everyone that attended the presentation. You have my email address right on the last page of the current screen. If you have a chance, you can find me email. I always answer every question to every shareholder, whatever you own, 1 share or 1 million share.
Perfect. Well, thank you so much for joining us. And we'd love to have you back in the future with some updates.
Thank you very much, Anna.
All right. Everyone stay with us. We'll be right back.